Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's keep going with our analysis of the gold market. Yesterday we talked about the retracement because it actually was natural to suggest from the shape of the hand shoulders pattern that is forming right now on lower time frames. And we've got this retracement. In fact, from technical point of view, everything stands just great. And I would say that it's absolutely perfect. But unfortunately, we have to make the decision on position taking on the environment of the coming Fed meeting. And here some tricks might be, as from the Jerome Powell, for example, because we know about the confrontation between the Jerome Powell and Donald Trump. For instance, you could totally ignore the comments of the Donald Trump for the risk for the rate cut, or it could take some 50-50 position, 50-50 decision when he, for example, keep everything as it stands without any rate cut. But in the comments, that may be some dovish moments, and that will be some contribution to the Donald Trump position. We would not want definitely what should happen. I suspect that the recent drop on Nasdaq market is too small to make the Fed start cutting rate by this reason. Every time I'm recalling the collapse on August after the first rate change by the Bank of Japan. This collapse was significantly stronger, and it was right at the eve of the Fed meeting. So no steps have been taken. And today I think that hardly it will be the reason for a rate cut. So from that standpoint of view, overall position of the economy's situation doesn't suggest any rate cuts for now. So from the purely economical point of view, Jerome Powell actually has all rights to just keep everything as it stands. On a lower time frame, what we have on the full time frame chart, that's the hand shoulders that we are talking. Market stands on the top of the right arm. That's why I said that this is the point where you have to make the decision, whether you would like to trade it or not. Here, I can't advise you just because of the Fed. Everybody have different sensitivity to such as events of the big data releases, Fed meetings, and so on. So here can't be just a single decision. Everybody should decide whether they would like to take part in all this stuff or not, or better to wait the moment after the Fed, see what will happen, and then make the decision on the relatively quiet market. This is also good solution. What I would do is probably I would try to take the position here based on this pattern, but as a compromise decision, theoretically you could try to catch something on a really very small time frames. For instance, here what we have on hourly chart, market stands in the 618 resistance zone, 765. So as we said yesterday, the split of the position is not a bad idea. So if you've taken first position here, now you, for example, taking the second larger part of your position here, your average will be around 27.55, which is absolutely not great, as you understand. 27, maybe 53, somewhere in this area. What I would do is probably trying to catch on the 5-minute chart something. So if we will see on the 5-minute chart bearish pattern, you could try to use this with significantly tighter stop. If you're not, if you're a bit worried about the Fed results, big volatility, and you do not want to take too much risk here, that's possible compromise. If you do not want to deal with the very small time frames, trying to catch there something, but you would like to take the position, theoretically you could use this big pattern and just see what will happen around it, because this is, as I always call it, as a culmination point. If market will start moving higher and break above the C point, it probably will tell us that hand shoulders is failing, and we should be ready for the further upward continuation. Everything should start moving to the downside right from here if bearish context will start working in general market, trigger this. It's very simple. From that standpoint of view, from the technical point of view, here we do not have any big problems. The only problem is the results of the Fed meeting. That's the only big riddle that could really shake the boat. So you have few hours still, make the decision, decide what you will do, maybe just to contract the trading lot. This is also the solution in the current circumstances. Because in all other markets, everything stands mostly the same. So if you take a look at the 10-year bonds, here is probably also shoulder might be start forming. Rising yields will make the pressure on the coal market as well. On dollar index, grabber still stands on the way. Market not closed. I mean, the week is not closed yet. But in the current moment, if everything will close as it stands, we will get the bearish grabber for gold and bullish for dollar index. So from that standpoint, you could see that the cross-market background for possible deep retracement on the gold will also have. That's all information that we have. Make the decision, think, and decide.